Investing sounds complicated. Stocks, funds, tickers, percentages. But here's the truth. You don't need to be an expert to start. You just need to understand a few basics. In this video, I'm breaking down everything a complete beginner needs to know to start investing with confidence. Welcome to Savora Finance, where we make money make sense. Let's get into it. Part 1. Why investing actually matters. Here's the simple reason investing matters. Cash sitting in a regular savings account loses value over time because of inflation. Investing is how your money has a chance to grow faster than prices rise. It's not about getting rich quick. It's about giving your money time to work for you. Part 2. Stocks, bonds, and funds explained. Simply, a stock means you own a tiny piece of a company. A bond means you're lending money to a company or government, and they pay you interest. A fund, like an index fund, is a basket of many stocks or bonds bundled together, which spreads out your risk instead of betting on just one company. Part 3. What's an index fund, and why beginners love them? An index fund simply tracks a big group of companies, like the S&P 500, which covers 500 of the largest companies in the US. Instead of picking individual stocks and hoping you're right, an index fund lets you own a small piece of all of them at once. It's one of the simplest, most beginner-friendly ways to start. Part 4. How much money you actually need to start. This is the part that surprises most beginners. You don't need thousands of dollars to start. Many investing apps let you start with as little as $5 or $10. The habit of investing regularly matters far more than the amount you start with. Part 5. Retirement accounts, 401k and IRA. In simple terms, if your job offers a 401k with a company match, that's often the very first place to invest. It's essentially free money added to what you contribute. An IRA is another account you can open on your own, with tax advantages for retirement savings. Both are built for long-term growth, not quick wins. Part 6. Common beginner mistakes to avoid. The biggest mistake beginners make is checking their investments every single day and panicking over small drops. The market naturally goes up and down. What matters is the long-term trend. The second mistake. Trying to time the market perfectly instead of just starting and staying consistent. Investing doesn't have to be intimidating. Start small, stay consistent, and give it time. That's really the whole game. If this helped, hit subscribe. Savora Finance is all about making money make sense. Let me know in the comments if you're ready to start investing, or if you already have. See you next time.